Okay, let's go ahead and kick this happy Wednesday. Happy Hump Day. Voice is a little cracky today. It is drastically cooler where I am, but still the stock market is rock and rolling. And today we got some interesting stuff to talk about. Primarily, we did get a report out this morning. Right now, it is 10:32 a.m. on the Eastern Standard Time frame. In ADP, ADP job report came out, which showed a rise of 42,000 jobs in October, which was more than expected, and really put a lot of labor fears to side. But the issue is still that the government shutdown is still happening, and not to mention the Federal Reserve is really still kind of divided in a way. Talked about this in my previous video. If you're definitely looking for daily, pretty much, I want to say raw data, don't really edit too much around here. I just really keep it real. Might actually be incorporating some webcam footage relatively soon, but I just go ahead and speak how it is. I'm not affiliated with anyone, not a stockbroker, a hedge fund. I'm just a small fish in a big pond, pretty much average retail investor. And stuff like this right now, it's good, but at the same time, there's a lot of other drama as well. And being a retail investor, it's really hard right now because if you're going to be throwing money at the stock market is pretty much at near all-time highs. If anything, we are at all-time highs. I mean, a couple percentage points away. We're still above all the moving averages, the 50, the 100, the 200. We're on a bull trend. The RSI is very mid-range. So, I mean, it's like you're sitting on a lot of cash. I am very cash heavy myself. I went very cash low during April Liberation Day, all this area. I ended up honestly cashing out of a lot of positions way too early. For me, I ended up selling a ton of positions the end of June, mid-July, and the market just continued going up. Talked about this also last week about if we see a 2018 style dip or maybe a 2021 where we are going to rally into the end of the year and then sell off like 2021, or if we start selling off now like 2018. Nobody really knows, but all you can really do is really look at great companies. SoFi is basically pretty much stagnant. Obviously, we got the big dip, market open, pretty much algos manipulation, and it gets bought up. Volume right now on SoFi is just really weak. But then again, I mean, there's really no new updates. SoFi is going to go with the broader market. And if the broader market is going up, SoFi is going to go up. The broader market is cutting interest rates and the broader market goes up, SoFi is going to go up. If the Federal Reserve doesn't cut interest rates in December, you're going to see a hissy fit in the overall stock market unless Powell is extremely dovish, in my opinion, about January. If Powell comes out in December and says, hey, we're going to hold interest rates, but instead of doing a 25 basis point cut in January, we're going to be doing a 50 basis cut. Maybe that's going to get the market to really, really dive up. But if the government shutdown is still happening and they don't get some of the reports they need, or maybe, honestly, they do an emergency meeting and get back the federal workers to do the data really quick. I'm not a federal employee. I don't really know too much what goes into that job. But something tells me, like, pretty much anyone on a skill set can be trained to do that. So they're literally a phone call away saying, hey, get your bum to the office and go and get us, like, give us these Excel, like, reports and stuff. Okay. That would be really nice. It would be nice if we did get another cut in December. But I really don't know. So, what do I think personally? If I had to bet on one option, oh man, please don't dislike me, but I'm going to bet the worst option just because the vast majority of people think the worst. But right now, so many people on Wall Street are very bullish. So I want to do the opposite as them. And the opposite of them is that we're something drastic is going to happen where maybe the Federal Reserve does get the labor report for December, and they're like, oh shit, we need to cut a lot. We don't need to cut like 25 BP. We need to cut like 50, maybe even 70. Like, imagine if Jerome Powell comes out and says, hey, yeah, we're cutting 75 basis points. We're cutting 1 basis point. You would think the market's going to go parabolical. No, the market's going to actually probably sell off. And the reason being is because people are going to be saying, why are you cutting so quick? What's going on here? Powell is going to be forced to say how it is. And honestly, Powell, the Federal Reserve employees, they say that they're not affiliated. That's total bullshit. The guy, if you look him up, he's a Democrat. You got a Republican, a very disliked, hated Republican in the White House. He's obviously very disliked by the Democrats. So if Powell is a Democrat, and if chances are that you're a Democrat, then you're gonna more than likely dislike who's the president. But just keep in mind that he's not going to be the president forever. Ignore the stupid memes and the stupid people in our country. The guy's going to be gone before you know it. And then it's going to be 2028. It's going to be election year all over again. I'm dreading that. I'm so sick and tired of the nonsense. And I'm pretty much like smack dab in the middle, pretty much being like a conservative libertarian. I honestly can't stand both sides, but the whole premise is that, yeah, it's going to suck. I'm so sick and tired of the political drama. However, if Powell does come out and he says we need to cut basis, we need to cut rates twice as fast, he is going to be straight up honest. Oh, the economy is terrible. It's entering recession. He's going to be knocking down Trump left and right because Trump was knocking him down all this past year. He's going to get every chance to knock him down. And sure, the Federal Reserve is going to cut by maybe 50, or even higher. That would be awesome, especially if you're trying to buy a house or refi some loans. But the stock market's going to be hit. I can honestly see that scenario playing out. But then again, I can see us rallying into the next, and then 2026 is going to be really bad. By the end of 2026, which is why I'm really looking at doing some leap options on SoFi. I don't dabble in SoFi. I don't dabble in leap options. I dabble in SoFi for sure. But with the growth rates, and even if we do get into a recession, SoFi, Anthony Noto has stated a lot of times previously that they can thrive. Because if we are going into a recession, and if people are looking for ways to maybe save money each month by refining a mortgage, by refining credit card debt with a personal loan, SoFi actually offers 7 years. I was actually looking at their personal loans the other day. 7 years SoFi offers for a personal loan, which is, I honestly can't even find anyone out there offering more than 5 years. SoFi does 7 years personal loan. Interest rate is really low on the 7-year one. And a lot of people are going to be taking advantages. So SoFi can actually thrive. Now, you got to remember, great company, bad stock price. The stock price during a recession for SoFi is going to be terrible. The company, in my opinion, is going to be phenomenal. So I do believe that SoFi can thrive in a downward stock market area. On my Webull account, my second account, I've been showing this the last couple of videos. My Webull account average is in the 12s. Do I see SoFi going down to my Webull average? It would have to be bad. You're talking about a 50, actually it's more than a 50. You're talking about 60% drop. If it went down to my Webull average, man, oh man, I'm increasing shares like a mother humper. But even if it goes down, even if SoFi goes down, like I was saying, we have a lot of consolidation around the 24. We have even more consolidation around the low 20s. I would personally be averaging up. We have great support now at the $18 mark because we hit the $18 mark back in January, and then we busted out of it. And when it comes to technicals, I am a technical trader. What was resistance is now support. So we have a lot of support. We have a strong support at the 24 area because we essentially had a gigantic double top all the way back in 2021. Yes, technicals do matter, even though SoFi is all FA, fundamental analysis, but it does matter. But I mean, if we break the 24s and we trend down, in my opinion, it's just buying opportunity after buying opportunity. Now, as for Palantir, we're seeing a lot of negativity around this stock, but it seems like the negativity is really pretty much like halted. A lot of people are saying Palantir is going to break the 50. I mean, sure, okay, there's going to be buyers. If Palantir goes to the 100, there's going to be buyers. I don't have a position in Palantir, but I mean, if we break the 100 and if we trend near the 2, I mean, hell, even if we break the 100, even if we get close to the 100, I may open a position on this thing. I've been in and out of Palantir a lot, and I was a buyer in Palantir during April of this year, sold end of June, beginning of July, sold way too early, but I made money. Made over 60, 70%-ish. So, I mean, companies like this just make a lot. But I will agree it was a mistake. Obviously, I should have held... It should have held a lot more than swing traded. But the thing that scares me about it is that Palantir has grown so much. SoFi, on the other hand, we haven't reached the level of Palantir just yet. Wall Street hasn't even given SoFi yet a true multiple. SoFi has not gotten a fintech or a bank multiple. Right now, SoFi is trading like a bank. Wall Street has not given it a hybrid yet. Imagine if Wall Street says, no, you're not a bank, you are a straight fintech. That would be the bullish thing on the planet. You could see SoFi start going parabolical like Palantir. I don't believe it's going to be like that. I myself, along with many, many other investors, truly believes that SoFi is going to be a hybrid multiple, a fintech, which means by the end of the next year, 2026, entering 27, we could very well be at a double up, $60. Phenomenal. If we get a big dip, I'm just going to scoop up more shares. Here's another one, Meta, pretty much rebounding today, which has a lot of people really at ease. In my opinion, this stock is going to sit on the sidelines for this quarter. We gapped up so much that we pretty much have to fill a lot of empty gaps here. And we're probably going to over the course of the next, several months. But there's nothing wrong with Meta. It's just that Zuckerberg is spending more revenue than they're actually generating. They're still a growing company. Yeah, they are over $1 trillion, and they are still a growing company. That's a little shocking for people to understand. Meta is a company that the stock market has never seen before. It's a business model that is like Nvidia. As long as there are people growing their businesses on social media, Meta's business is going to skyrocket. You need Meta to grow your business. Where else are you going to go? So, very unique business. Palantir is in the same boat. We have never seen a company like Palantir before. We have never seen a company like SoFi before. SoFi is a disruptive company. They are disturbing the entire sector because they are the first bank with no branches. And it's amazing. So, ADP jobs report today, in my opinion, it's basically pretty much just causing the market to be stagnant and the bleeding to really stop. We pretty much had a red Monday. We had a red Taco Tuesday yesterday. And now we're having a stagnant, like, hey, let's calm down from the selling. We could go back to a red day tomorrow. We could go a little more green. I mean, hell, something positive could happen and we could be at all-time highs on Friday, if not busting through all-time highs. That's how quickly this market changes. I don't mean to insult anyone's intelligence, but if you've been in the stock market for a long time, you know what I'm talking about. So I think there's a lot more room for everything to really move up, and there's also a tremendous room for stuff to go the other way. Just really got to wait and see tomorrow what really happens. I don't believe we have any more. Let's see. I'm just Googling some stuff. And by the way, if anyone's wondering, ADP jobs report, it is a national employment report, a monthly report on the U.S. private sector of employment. People say these, like, you hear people talking about this stuff all the time. Believe it or not, a lot of people don't even know what these things actually are, or what they stand for. When I got into the stock market, I was actually one of those people. I'm like, what are these people talking about? All I know is that it has to come in good. That's all I know. If it doesn't come in good, then Houston, we have a problem. But just double checking what we have here. So let's go ahead and see. Tuesday, I'm on economical data right now. And if you ever want any of these reports, they're all public. Just type in on Google, economical data. I'm on Market Watch right now. Thursday, this is going to be a good one. Tomorrow, November 6th, initial jobless claims. Maybe this can shake some stuff up. Fed governor, this might be able to shake some stuff up, but maybe not. Here is a big one, but we may not get this Friday. So the unemployment rate, all this stuff matters. All this stuff matters tremendously. Are we going to be getting this? Are we going to be getting unemployment data this Friday? Let's see. Yes. Okay, so Google AI is telling us that we will be getting unemployment data. If this unemployment data is going to be higher unexpectedly, oh man, that could be a signal to the Fed to come out and be like, hey, we gotta be even more aggressive. I was talking to a friend of mine, actually 2 days ago. I forgot to mention it in yesterday's video. The Federal Reserve can cut interest rates anytime. They don't have to be at a FOMC meeting. They could cut interest rates tomorrow if they wanted to. Has that happened before? Yeah, it happened plenty of times. The Federal Reserve doesn't have to wait until their every 30, 45-day meeting. If something happens tomorrow and the stock market goes down by 30%, okay, that's unrealistic. We would be hitting every stop on the planet. The point is that the Federal Reserve can cut interest rates whenever. So understand that as well. They don't need to, but these reports do matter, if anything. So I'm going to leave this video pretty much on this note. We got to really wait to see what is going to end up happening. I'm still very optimistic, but who really knows? This is just a short little update video for Happy Hump Day. Hopefully everyone's doing good, and if you enjoy this, please thumbs up this video. Subscribe for more future content, and I'll see you guys tomorrow. Later.